Welcome to the Stock Market Morning Prep video for Monday, May the 12th. Friday was pretty much a quiet day. Usually is as you start getting into the summer. Obviously, we're not there yet, but and Fridays usually end up bullish for some reason. I have no idea. Very little Fridays. If you look at the some of the past performances on Friday, they don't like selling the market on Friday, that's for sure. And we ended up positive. Dow Jones up 32, Nasdaq up 20, S&P up just under 3, and the Russell up just under 10 points. So quiet day. And I'll tell you, I do think we're going to see some volatility pick up this week. We did have a little bit of a reversal in the in price action on Friday, so we're going to see if that carries through today and possibly tomorrow. We may see some strength today and tomorrow. Dow Jones, as you know, made an all-time high. I think it was Thursday, I believe, and S&P is just kind of knocking on its door of all-time highs, where we have the Nasdaq, Russell actually moving lower, which are two of our leaders. And the transport's actually holding up very well as well. So look in front of you, you can see the indices. I borrowed some really nice charts from stockcharts.com, but I wanted to show them to you because I made a good, interesting point, exactly what I'm actually talking about. Markets are all messed up. I mean, gold isn't doing what it's supposed to do. Bonds are rallying with the market. We have the dollar broke lower and then reverted back to the upside. And then you have the Japanese yen really sitting in a holding pattern with two bullish patterns within. So just literally crazy price action. We're not getting anywhere, and I'll show that to you in the chart. So what do? You take a step back. You try to trade the best setups until this cycle starts to end. And once this ends, then I think we'll see a pickup in volatility. But you have bulls and bears fighting for this area. And you know the bull case is that the S&P is sitting just under that 1272 extension at all-time highs, chopping around for the last few weeks, where you have the leaders breaking down. Now, that is a big concern to me because when you have leaders here breaking down and we have laggards leading, that's not a good sign. Can the Dow and S&P take these guys and bring them back higher again? I don't know. I don't think you're going to see Russell and Nasdaq make new highs anytime soon. Unless something really good comes out of Washington or whatever the case may be. It's just I just don't see it. I don't see that price action. So this is a big flag for me. This is a big warning flag, and I've been obviously saying that for quite some time. And yes, I've reduce your share size, and yes, you trade less and few during the day because you have to, unless you see something fantastic that runs across your screen. There's 8,000 stocks, over 8,000 stocks out there to trade from, and you're not going to see everything. So unfortunately, that's the case. But just really, this is not good. This is not definitely a good sign you want to see. Now, another bearish thing is look at what we have. We have all of banks, retailers, biotech, internet. I could put another 15 down here, and you're all trading lower when S&P and Dow are making new highs. That is not a good sign as well, right? We have market divergence here, big market divergence. Now, on the flip side, we have what's doing well: REITs, utilities, staples. That's not what you want to see leading the markets. Dividend stocks leading, no question. That's a big no-no. That's a big red flag here. So when you have, stocks sectors that are supposed to be leading, lagging, and then you have staples, REITs, and utilities that pay a dividend leading, that's a big flag. That's a big red flag for me. Now, I'm not saying to go out and short the market at the moment. I'm saying is that I think I think the markets are still vulnerable at these areas. And when you don't have leaders leading, I think even if the market does pushes up to new highs, I think that's going to be real short-lived here because you don't have banks and you don't have the semis and you don't have technology moving along in symmetry with the other indices. And that's a big problem here. Okay, so let's just go into the index, but I wanted to show you what the problem is. Now, if things start to revert back to the other way, where the utility sector and staples and REITs and the safe haven sectors start to roll down, and we have the growth stocks starting to move higher again, tech moving higher, banks starting to move up. That's a different story. You could see that rotation come back into riskier assets. That's another story. But until then, you have to just be cautious as a trader, as a professional. You have to take a step back until the markets can realign itself. Right now, it's all over the map. And that's really the only thing I can say about it is all you need is one big catalyst, and I think you're going to get some big movement to the downside. Okay, but anyway, let's take a look at bonds. And as you can see, bonds, we had that big identified that big inverted head and shoulders, left head, right shoulder, and then we broke that slanted neckline. Long-term picture, I do think bonds are still in the bear market, but in the short term, I mean very short term, I do think you could see bonds move up here, and that's going to put pressure on equities. Okay, let's take a look at the dollar. And we did have the dollar breakdown on, I believe, Thursday, and we broke down, but then we reverted back up. And that really was, I think, Draghi basically saved the dollar. He had a big conference call and a statement on Thursday in Europe, and he saved the dollar because dollar was breaking down, and now we're reverted back to the upside. Still in a bearish pattern. We do have a descending triangle here, as you can see. We also have a big head and shoulders pattern that did not trigger. We need to close below 79 on a closing basis, and then we would see what would happen, go from there. But right now, with the dollar chopping around here, not helping us looking for trades in the commodity sector. You know, as hence the gold and oil. So right now, it's just a hurry up and wait, and let's see what happens this week. But remember, if we get some follow through to the upside today, tomorrow. Then I think you're going to have a pretty decent week. But and usually Monday and Tuesdays kind of put the pattern in for the market for the rest of the week. So Monday, Tuesday, we have some good. Then I think we should actually pretty much rally and just have that bullish tone going into the end of the week. Now, if we start to fail and we break down early in the week, then I think you're going to get that follow-through selling this week and then probably continue on into next week. But again, let's take it one step at a time here, today and tomorrow. Japanese yen, as you can see, inverted head and shoulders, ascending triangle, overhead cluster of resistance plus the 200. So it's not giving us any clues as well. All right, but not selling off either. Okay, usually this is inverted to what equities are doing. It's risk on, risk off. Now, as you can see here, pretty much most of the last couple of weeks have been just literally hell as far as price action is concerned. I mean, literally just ridiculous chop. I mean, for the last 2 weeks, you can see we have gone nowhere. We've gone nowhere. We're in a 20 handle range in the S&P with these big spikes up and fail. You know, and what does that tell you? Right now, there's able and willing sellers back at this extension. Okay, so any pop up like something like this, you know, you have the pattern already. You can fade that if you know what you're doing. If not, I'd stay away. But you can see here, this is last night's price action. We're in started open at Sunday night at 6. We're just hovering right above here. Really just looking to break out. So just keep that in mind, guys. As much as I'd love to short, I wouldn't want to be short at the moment until we get confirmation that price is indeed moving lower. Here's the diamonds. As you can see, made new intraday highs. This is the Dow Jones ETF. So the laggards are leading, and that is not a good sign. Transports, at least the transports here are holding up, and actually can hold up the rest of the market. It is our leader, and it's doing quite well at the moment. Beautiful bullish symmetry here, 820, 3450, and of course the 200 way down below. So looking really constructive here, at least for now. But remember, transports can usually does what it wants to do. And here's the IWM. This is not bullish to say the least. Literally clinging to this little support of 108, let's call it 50. We did get back above the 200 EMA on a daily. We're still below the 200 SMA. So let's see if we get a little follow through. But something like the IWMs, I'd be looking to sell rallies in. And then lastly is the Qs. I would be looking to sell rallies in Qs as well. As you can see, this is not a bullish chart at all. Whereas the Dow and the S&P, I would not be looking to short that index, at least not now. Let's wait and see if the markets do indeed roll over here. Okay, it's definitely going to be an interesting week, and I'm really hoping that we can get some pickup in volatility, at least some good volatility. Right now the trend is up. It still remains up, but with some major red flags. We have market divergence here, so we need to take a step back at the moment. Just look for really good trade opportunities at the moment. But we need to vacate the area. So it's either going to be a big failure at these extensions again and really start to break down and start making lower lows or lower highs, or we're going to break out to the upside. But I think that if we break out to the upside, I think that'll be the last push effort that the markets will get everybody back long. And then I think at that time, you will see the market start to roll over again and at least correct. And again, I'm hoping for an 8 or 10 or even 12 would be ideal. 12% correction between now and the summer, and then start looking to buy stocks going into the fall. And that would be ideal, and then have a nice big rally going into the end of the year. But again, we're way early, and it's only May. Let's see what happens. Let's take it one step at a time, and let's see what happens in the next couple of days. Again, if we get some follow-through, remember, I think you'll get that bullish tone the rest of the week. But if we get weakness today, tomorrow, and we really start to see some market volatility to the downside, then I think that'll set the tone for the week as well to the downside. Hope it helps everybody. Have a great day, and we'll speak to you tomorrow. Take care.